And in this video, Robert Kiyosaki is asking, is it better to invest for capital gains or for cash flow? That's in the book, The Cashflow Quadrant, video number 44. Please join me. Hello, welcome to Take a Step to a Better You. I share what I know and continue to learn on this channel. And if you're new, my name is Sherifa Nakalema. I'm a business owner in Virginia, USA. In this one, I'm talking about the difference between investing for cash flow or investing for capital gains. That we're getting that from the book, The Cashflow Quadrant. But generally here, I talk about money, earning it, and anything to do with money. And then I also talk about business, and I read these kind of books that help with business. And I also talk about personal development, making you the person better, learning things that make you better. And then motivation. I ask you to take a step to make your life better. I just pick a topic and go with it. If any of that sounds interesting, if taking your life to the next level sounds interesting, please click on that red button. I'm assuming you're new or you've been here before but you haven't clicked it. Subscribe, please. Click on the bell also to be notified when I have new videos. Those of you who read all that, appreciate you very, very much. Especially those who keep coming back and watching the video to the end. Watching the video to the end matters. And if you really can't watch it to the end, at least watch 50%. When you see the videos like 10 minutes, watch at least half of it. If you watch less than that, you are doing the video a disservice because YouTube thinks you don't like it. That's the only way they interpret it. Okay, that's a message for all of you. When you watch anyone's video, if you want to support them, never watch less than half because YouTube tracks what you are doing. Always like, leave a comment, support someone. Okay, so today we are talking about, it's actually a short read, but I'll be adding my 2 cents at the end because he doesn't explain it very well. Yet it's a very, very important topic. So I'm going to explain at the end my 2 cents to clarify what he's talking about. He's talking about investing for capital gains or investing for cash flow. Those are technical terms, but I'll have to explain what they mean after we read what he's writing. So, but before I do all that, I have to talk about my schedule. I'm here daily, 12:30 p.m. USA Eastern Time. You can see on the screen what I do every day, but on Friday, I come live. So please put the notifications on. You see me showing up on your feed, and please click on it. Click on it for notification. And then the book, the main message of the book is the Cashflow Quadrant. That's the name he gives it. He came up with this term. It's a very popular term, Cashflow Quadrant. He says, that's Robert Kiyosaki. By the way, he wrote the book, the original quadrant. Maybe you could be familiar with this, but not with the one I'm reading. But his name is Robert Kiyosaki. And he came up with the term, the Cashflow Quadrant, to mean, I'll show the image, that we earn money from being employees on the left, which is E, or S. S stands for self-employed or small business. On the right, B stands for business owner, but these are large businesses. And then I for investor. So your money comes from those quadrants. And in this book, he's explaining the best way, which best quadrant, how you move from this one to that one. So we've covered a lot. In fact, at this point, let me mention that video number 43, because I'm about to start reading, but I have to go through all this. So 43, which this one is 44. In 43, he was selling to those people who invest their money in 401k plans, those retirement plans, that they may not be good for you. He gave 4 reasons why. And if you want to get to that, I'll link it in the pinned comment. Pinned comment, when you go to the comment, the top comment, always I'm putting now the previous video. And then if you want to get to the book, listen, audio is free. Amazon Audible provide this for free, but you have to add your name. And then for 1 month, it's free. After that, if you want to continue to be their member, that's up to you. For me, I like the free part of it. That's why I talk about it here. And then for the book, that is in the description to get to the link. And then also the physical book, if you want it to be shipped to you, then that's also the link in the description or through Amazon. My website, Honest Soul, takes you to Amazon Deal. There's a page You can get to that. But if you want to watch all the ones I've recorded, this is number 44. Then it says that a playlist that I call Cashflow Quadrant, or end screen here is the end screen. When this video ends, there'll be like, I think we changed it. It's not Cashflow Quadrant. We call it financial. I think I call it financial freedom. Something financial. But I have at the end of this video, and then also in the description, like in the description, you see that I'm saying if you want to watch all of them, click here. So that's that. Now, reading is very, very short, by the way, the reading part, but I'll speak after I read. So what does Robert say? He put a short headline when he's going to talk about this. He said, what is the best investment? The average investor does not know the difference between investing for cash flow and investing for capital gains. Those could be new terms for you, or maybe you heard them, but what do they mean? So most investors invest for capital gains, hoping and praying. So when you are investing for capital gains, you are hoping and praying the price of their stock or home goes up. As long as you have more cash flowing in than flowing out, your investment is a good investment. So keep in mind that it's not the asset class that makes a person rich or poor. I mean, it's not what the investing in. For example, when a person asks, is real estate a good investment? I reply, that's Robert talking, I don't know. Are you a good investor? Are you a good investor? Or if they ask, are stocks a good investment? Again, my answer is the same. I don't know. Are you a good investor? My point is that it's never the investment or asset class that's important. Success or failure, wealth or poverty depends solely on how smart the investor is. A smart investor will make millions in the stock market. An amateur will lose millions. Tragically, I'm reading the last paragraph, most people do not think learning to invest is important. This is why most people believe investing is risky and turn their money over to the experts, most of whom are not really investors, but salespeople who make money whether the investor makes money or loses money. That's the end of the reading. Now, those terms, capital gains and cash flow. So let me first explain the easy one. I think anyone would think about, like for example, if you have a house and you invest in this house, I'm not talking about the house you live in. Here we're talking investment. Maybe you rent out, or you have people renting, or you bought it, you want to sell it. It's your investment. You are looking at the price. You are looking at, okay, I bought it for $100,000. I'm waiting when it becomes 120, whatever. You are waiting for it to increase. Then you sell. That's capital gains. But he's saying there's another way to gain from that property before it even gains. Even if it didn't gain, you could have people renting that property. And by the way, maybe you bought it. Let me give this example. You bought it $100,000, but instead of going up, actually, when you check the market, it's going down. It could be going down, like it's not $100,000 anymore. It's now $80,000. So another person will be saying, "Oh, that's a loss." But then, in that same time, the rents could be going up. So if you are renting this property, and because most people, when I'm talking USA now, most of those businesses, when they are renting property, these properties have loans on them. They have mortgages. So they're always looking at the cost of what they pay every month on their loan. So if you have a property, maybe you are paying $1,000 every month, including the cost of repairs, all the stuff you do on that house. But the rent you collect is like 1,000, maybe 300. There is a 300 plus, which is profit. So he's calling that the cash flow. The cash flow. As long as the cash you're sending out after you collect all the rent, the cash going out, which is 1,000 you're paying out, is less than the cash you're collecting for the people renting, then you have good business. According to him, he's not worried about whether the price is going up. He's worried about the property price going up or down when he's ready to sell it. But when he's not ready to sell it, he doesn't worry about that. That's what he was saying. When you are investing, what do you care about? That things increase in value, or that what you're collecting is more than what you're spending? That's a cash flow plan. But the capital gains one is where you sit there hoping and praying that the price goes up. I think most people think about the price going up is what they're thinking about, but you could look at this other way, that you, as people live in the house, they're paying you, you're getting a car, a positive money out of it. It's a good investment. That's my simple understanding. Hopefully that helps. Put a comment. What do you think? Do you know the difference now between cash flow and capital gains when you're investing? Leave a comment for me. That's number 44. We end it there. Like I always end these videos, I say, take very good care of yourself. Take very good care of your families. Take very good care of your health. Please like the video. Please add a comment. Please share the video. This is knowledge that we should all know. If you are interested in investing in anything, know the difference between capital gains and cash flow. Take a step to a better you. Bye-bye.